Welcome to TheoTrade. Don Kaufman here, December 10th, 2025. Just minutes after the cash close here on this Wednesday afternoon. It was a Fed day. I don't know about you, but I am fed up with listening to and about the Fed. So in this evening's video, what I'm going to do, I'm going to read into order flow. Who cares what Jerome Powell said or didn't say? He was questioned by somebody that was probably 25 years old and right out of grad school that had no idea that the FOMC even existed several years ago. Nevertheless, care less about some of the Fed policy because the markets, they didn't necessarily move all that much on that Fed policy. But reading into some of the order flow, that's a bit of a different story. Let's actually tune in. Let's get right into it here. So the first thing that I want to point out, as the markets just closed like 8 minutes ago, the S&Ps, they got up there 69.08 and are kind of continuing to slip just a little bit lower here in the after hours. The first thing, when I start talking about like reading into order flow, what was the marketplace anticipating the overall movement to be today? And the answer was about $46. In the S&Ps, we were looking for about a $46 move. We moved just slightly above that and actually pulled back a little bit. But here's even more of the interesting portion of it. So I want to cruise directly over to the SPX. I often call it the mother of all products. I call it the mother of all products because it really is what moves markets. I mean, in the SPX, the notional value, that's kind of like the amount of capital that this thing that really moves through it. The notional capital is like nothing else. I mean, the notional capital in here is 3.5 million option contracts traded of a almost $7,000 product. Everything else just pales in comparison to this beast. And it's what the SPX says that, in my opinion, really, really matters. And what does it say? So this week, and this is why I really like to dig into the order flow. It's less about, what you think and more about like what's the actual market, saying at any point in time about risk. And in this particular instance, if you just take a quick glance out here with me, and I'm just going to highlight it, okay? This is right until the end of the week. There's still $60 of implied movement. That's not all that extreme. The entire week was implying $100 anticipation of movement, okay? So the whole week was anticipating a $100 move. But here's even more of an interesting aspect is that we haven't moved at all this week. Like you sit here and you can, prognosticate on 5 different things the Fed actually said, and people are going to read into the statement for like hidden subliminal meaning in the Fed statement. You are, right? It's ridiculous. Like Jerome Powell like scratches his forehead and the S&Ps move like 5 points. Crazy. People just get into this crap all day long. But the bottom line is we're still stuck in the middle with you. We haven't moved. Okay, just take a look. This is where we're presently trading, right in this neighborhood here. Okay, we've been boxed in for how many trading sessions now? Let's just count them. 1, 2, 3, 4, 5, 6, 7, 8. This is a 9th trading session that we just simply have not moved. So I would say this: the market right now is very much like pent up volatility. Okay, so that's why I wanted to read a little bit into like so what's the marketplace still anticipating for movement? You got $60 priced in, but the S&Ps, okay. Last week, this SPX, it didn't do anything last week. We did not hit the upper and did not hit the lower edge of an expected move. And the reason I'm covering that tonight on this Wednesday night is because this week we have not hit the upper and have not hit the lower edge of the expected move. 2 consecutive weeks. It's possible. It has happened in recent history, okay? But it's highly unlikely. And what I mean by that is, 2 consecutive weeks of not hitting an expected move is highly unusual. It's not impossible. Again, it's happened in recent history. We even have a time where we almost had 3 weeks of not hitting the upper or lower edge of an expected move. See, there's a hit, and then what we had is there's 1, 2 weeks in a row. This is a period of time. It's back in, June, summer trade. We did not hit the upper or lower edge of the expected move in 2 consecutive weeks. I told you I could point one out almost immediately, but it's very, very unusual to see that kind of price action, okay? The longer you stay in a very, very tight range, like we're in right now, the more dangerous it effectively gets. And the reason the more dangerous it gets, well, there's a couple reasons. Number one, okay, people continue to allocate. When they continue to allocate, when you're not moving over here, they kind of press allocations and they don't recognize that, look, it doesn't matter whether you're trading Broadcom, whether you're trading NVIDIA, whether you trade Meta. If the S&Ps, okay, I'll just give you an example. If the S&Ps were to turn south dramatically, okay, I guarantee every one of those stocks, including Broadcom and NVIDIA, even like, Boeing, they're all headed south with it. So the correlation, okay, factor is high when the markets are going to make a move. And when the markets have not made a move and they're stagnating like they are right now, okay, you're going to get a higher chance in the very near future of that break higher or lower. And again, it's very much binary at this point when you're going to get that break higher or lower, but it is going to force higher degrees of correlation. Okay. And you can see even today, the Fed announcement, they come out like, I always call the Fed like Punxsutawney Phil. Come out, they see their shadow, yada, yada, yada. 6 more weeks of winter, whatever. They cut 25 basis points. Everybody expected that. What did Jerome Powell say? Absolutely nothing. As I said, he gets questioned by, either somebody that has no idea. Okay. They're journalists. I mean, what do you want? Anyway, the point being is we never even hit high degrees of correlation today. So you can say whatever you want about this move. This move sucked. This move was nothing. In fact, okay, the NASDAQ even dragged behind it. Okay, the NASDAQ couldn't get out of its own way. And the reason the NASDAQ, okay, you have Microsoft actually broke down pretty good today. It was down about 3% throughout the course of the trading session. Microsoft's getting to some critical levels. And I'm bringing this into scope because it was not the AI trade that drove anything in the markets today. Okay, NVIDIA is actually slightly down. Meta's down. Okay, oh, you got me. Google was actually up in the day, but it wasn't the AI trade. And for right now, okay, I don't think you should trust a marketplace that is not getting leadership, okay, out of where there's been leadership. Because you're never going to convince me like, look, I can see as well as you can, the financials were up over 1%. You're like, yeah, man, the financials took the leadership role. Financials lead nothing, absolutely nothing, because all the financials added up together don't equal NVIDIA. So what do you got? You got crap that's rallying. And that rally just happened to spark the S&Ps up 43 points. That's where they're going to close, okay? Except their expected move was 46. Okay, so what do you got? Absolutely nothing. Okay, it is a big nothing day. I will give you this. Volatility did in fact crush down pretty good. Volatility is kind of in the basement right now. So any moves in volatility, it can't go much lower. It'd go marginally lower in terms of volatility, but any move in volatility would probably be higher at this point. And the reason is, people are like, oh no, the volatility can go all the way down to 10. No, it can't. Not with the Trump administration. They're a volatile administration. Everybody knows that. So expect volatility to probably bounce back. And the interesting and ironic twist to that is the market's already pricing the volatility, okay, to be higher. You need only look at the volatility futures. You go 42 days out, they're already trading at almost 19. You go 70 days out, they're already trading at 20 again. Okay, so if you think that volatility is going to go higher, newsflash, it's already priced in. Again, what are we really left with, though, for the remainder of this week? And for that, again, I go back to the SPX. As I said, moments ago, okay, we have done nothing on the week. And that's, like in summation, we've done absolutely nothing on the week. Get ready to move. I said that last week, and we just kind of sputtered. Dud, okay? Get ready to move. I mean, this marketplace is just, as I said, it's like kind of pent up with energy over here. And of course, you want to know like, oh, which way? Look, if we're going to explode to the upside, it has got to be unequivocally done on the back of big tech. There is nothing else to move us at this point. You're not going to tell me again, the financials are going to break out. They break out all they want. They can drag the S&Ps up minimally, marginally, just like they did today. But if you're going to move, you're going to smash higher, it's got to be big tech. But right now, okay, your big tech is leaning, okay, a little bit to the downside. And that's the kind of order flow that you might get reversals here even overnight. The Fed, you just got to push it out of your mind. It was a catalyst, okay? They lit the fuse. Now, let's see if volatility can make a raging comeback. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.